one of the smartest guys in the stock market I know is my good friend John Kirkland. He is the cheese. Okay, he is the man over at Ironridge Global, equity investor in microcap companies. He's been in the program a number of times, and he will tell you that it's not a time to jump off the cliff right yet. Is it, John? Is it time for us to jump, or is it time for us to stay?
I find that tall buildings are better than bridges.
I would tend to agree that but if you jump off a tall building, John, there's a chance you could bounce, just like the stock market,
just like a dead cat.
And yeah, exactly right. Any chance that this market will be bouncing anytime soon, sir?
In the long run, the stock market will always be up. So there's no question that it's going to go up eventually. If I knew whether it was going to go down first, then I wouldn't be wasting my time talking to guys like you.
Yeah, thanks so much. I appreciate that. People wonder why you waste time talking to guys like this anyway.
Dude, we're live. Hello.
This is supposed to happen. This is supposed to happen during. Hey, listen, John. The idea behind protectionary measures in diversifying your portfolio is one of the reasons why small cap and micro cap investing is so prevalent. Talk about you as an equity investor in microcap companies, and they do $250,000 to $25 million with these companies as in forms of capital formation. Is this a possible hiding place when things get ugly on the main market?
Well, by and large, over time, the market will always be up, and as a whole, small caps will always be up more than the market as a whole. And micro caps will always be the segment of small caps that's up the most.
So so as you think about this, though,
I got to rewind that part of the
well,
show.
what he's basically saying is that small caps are going to do better than the overall market, and micro caps
better than the small caps.
Exactly, but there's some risk involved in that. So it comes down to doing your research, correct?
It's always about picking the right company.
Yeah.
John, one of your talking points today was talking about broker fees. Part of the reason I pay a broker fee is so they do some of that research for me. Is that what is that a fair expectation on my behalf or not?
The very best money managers, fund managers, financial advisors will do just enough better than the market as a whole to pay their own fees.
And that's so what's your suggestion then?
Well, here's the fundamental conflict is that you need and want diversity, but the smaller the pile of money you have, the fewer positions you can branch out into. And for each position you buy, you're paying a fee to buy into it, and you're paying a fee to sell out of it. So really the most important thing for the small investor is to minimize the number of trades. Wow. Get into a fund and stay there. Buy a stock and hold it.
So on that buy and hold strategy that you're talking about, you do have to beat the street by a significant amount if you're paying some massive broker fees. So and you point out so aptly that this is like ATM fees when you're paying to get your own money out of the bank, right?
Well, there's a reason they have the fast cash button where you push it and you get $40 back, and they can charge you $2 or $3. So you always want to go and get the most money you can because you're going to pay that same fee regardless. And the same is true of stocks. If you're going to pay $5 or $10 for a trade, or for some stocks, $20 or $50 for a trade, you want to buy the biggest position that you can afford and hold it as long as you can before you sell it. You pay 5% going in and 5% coming out, and you make 10% for the year, you've lost money.
I wish I did this show 30 years ago.
Yeah. So John, with money managers, let's say somebody has significant holdings. He's not trading individual stocks, but money managers. Talk about those fees. Those guys are taking a percentage of your of the value of the account every quarter. Is there a guideline that you guys go by?
Pay nothing is our guideline.
No,
my personal holdings are all in Vanguard, which is absolutely better than all the rest, solely because they're cheaper than all the rest.
So Vanguard is the leader for you guys because you're not paying the fees that you have.
Well, as a company, we don't use anybody. We don't use any manager. We make our own decisions completely. We use individual brokers who follow our instructions. So we don't take anybody's advice on anything.
Talk about the buy and hold strategy. We first of all define that for people, because a lot of folks that watch this show are interested in some of my stock picks, but they're also interested in wisdom that you have on the overall markets. Are you a buy and holder? Is that a good philosophy? I know it would be for at least in relationship to trading fees.
The most important statistic on this that I'll never forget is that 90% of day traders lose money, and 50% of day traders lose all their money.
Oh, that stands out.
So of course,
chart.
so a buy and hold strategy is best, and you hear that over and over again. Gabe Wizard
during the
talks
buy and
about
hold, while you're holding, you see bad news about the stock or something. That's when you start to wet your pants a little bit.
You can't check. It's a watch pot never boils.
Oh yeah.
Once a year, if you've got, somebody asks, what if I've got $1,000 to invest? Huh. Invest it all today, put it where you think it belongs, and then forget it. Right. Don't check it for a year. A year from now, come back and adjust your portfolio. Right. If you watch it every day, you're either going to go crazy or you're going to give in to temptation, and you're going to buy and sell something, and you're going to guarantee that you can't possibly succeed in the long run.
There it goes.
Yeah. You're going to waste a lot of time.
And you get shingles.
Yeah.
Sure. Get a comfortable chair if you're going to do
exactly.
that.
Hey, diversification is the cornerstone to a lot of investment strategy, John. But you say not if it creates too many fees. How does diversification create fees, and how do you avoid that?
Well, let's say you've got $1,000 to invest, and you say, okay, I'm going to diversify. I'm going to buy 10 positions. So you buy 10. That's $100 a piece. You're going to pay $5 a piece in fees, or $10 a piece in fees. Yeah. You're paying between 5 and 10%. You've wiped out any possibility of gain. So if you don't have 6 figures to invest, stick with funds, or stick with 1 or 2 or 3 or 4 or 5 positions you really believe in.
But so I used an example earlier today about a friend of mine who's a real estate developer, and he has no money in equities. He has all his money in property. And he was saying, "Hey, look, I want to."
Lunacy.
Yeah, it is lunacy. And I said, he says, "I want to put my money." He says, "What? How do I? What do I do with $250,000?" John, is that a you go into Vanguard and you pick out the funds you want to be in? Or what would your recommendation be on something like that?
I would take 80% and put it in something safe. If you're in California, the Vanguard California Tax Managed Fund is really good. Or put it in the Vanguard Index 500 and ride in the same boat as everybody else. Or put it in bonds, or a PIMCO bond fund, even though Bill Gross is gone.
We need
put
to
it
have
in something big and safe. And then the last 20%, gamble like a maniac.
I love this guy. We need to have John Kirkland's Corner on the Big Biz Show. John,
Kirkland's Corner.
Kirkland's Corner.
I could hear the music now.
He's kind of cranky. He's a bit of a contrarian. He's good looking.
Yeah.
And he knows more than you and I. On his little finger. Thank you, John. See you next week, pal. John Kirkland. Ironridge Global, ironridgeglobal.com.
Not Iron Ridge, Wisconsin.
No, Ironridge Global, equity investor, microcap companies. Go check out their website. You'll read all about John. And his links on our website.